During the housing market run-up, Florida was basically the poster child for home prices seemingly going up forever. Well, that is now over, guys, and in fact, trends are starting to reverse now in many different areas of Florida, but notably in areas where inventory is starting to explode. And this whole Florida housing bubble is just on the precipice of starting to burst as we speak. And we just had this huge downpour here. I had to wait for it to stop for me to come out here. I'm just kind of walking back and forth between the streets and the sidewalk here because everybody's driveway is flooded, as you can see. I'm going to show you some real-world examples right now of how and why Florida's housing bubble is beginning to burst. And it all starts with inventory, okay? That's been the big thing that we've all heard about the housing market over the last couple of years is inventory is just too low, and that's why we're not going to see home prices go down. And for the most part, that has been true. But that's starting to change in a lot of different areas, most notably here in Florida. If we look at this graph here, this is an inventory chart that goes all the way back to January of 2008. And you can see how much higher inventory used to be back then, which was just astronomical compared to today, right? Those days seem to be over in terms of having that much inventory. But we can see once the inventory came down from that 2008 peak, it started stabilizing around 2013 or so. And between 2013 and 2020, for that 7-year stretch, the inventory here in Florida was very stable throughout the years, guys. On average, about 150,000 listings on the market at any given moment. Well, as of right now, when I'm making this video, statewide, the inventory levels are already at 120,000 listings. So that is getting very close to that normal pace that we have seen during the past. And it's literally a 20% increase in inventory just from 1 year ago. We have inventory for existing single family homes up 14% in just 1 month. And we also have the inventory for condo and townhouses up 49% in 1 month. So the listings are really starting to go through the roof right now. Now with this increase in listings, we also have the amount of closed sales up. We had single family homes closed sales up 4.2% year over year, and we had condo and townhouse sales up 0.3% year over year. But as you can see, the uptick in sales is nowhere near enough to keep up with the rate of the new inventory coming to the market, guys. And so this whole supply and demand dynamic that we saw make prices explode here in Florida is starting to work in reverse. But before you get your hopes up, this new inventory source in Florida is not everywhere. It's not like everywhere in Florida inventory is exploding. It's kind of concentrated in a few different areas, which I'm going to show you. If we look at Reventure app and we look at different metros across the state of Florida, we can see the areas where home inventory is exploding the most is generally in Southwest Florida. The darker red that we see here on the map, the more inventory is exploding. And so when we look in the areas where it's concentrated red the most, we can see places like Lee County, Florida. Inventory growth is literally up 100% year over year. We can see Charlotte County is up 129%. I think that's the highest one throughout the entire state, guys. One area getting hit with 129% increase in listings. That is crazy. Then you have Collier County, where it's up 49.6%. You have Volusia County, 34.9% increase. Pinellas County, up 33%. And in other areas, it's still up pretty substantially, but nowhere near as these, like the Ocala area, inventory levels up 20% year over year. You know, if we go along the east coast of Florida, near the Daytona Beach area, inventory's up 35% year over year. Melbourne, Florida, that area, it's up about 22% year over year. So those are still massive gains in inventory, but it's dwarfed by the 100 and 130% increases that we see in Southwest Florida. Even if we look at Broward and Palm Beach counties, for example, we have inventory up 23 and 20% respectively in those areas. And of course, Miami is kind of the outlier here. Inventory is up, but only by 4.7% year over year. So not these huge gains that they're seeing in other parts of the state. So naturally, this increase in inventory is gonna have an impact on home prices, right? Well, let's take a look at what's happening so far. If we zero in on the areas where inventory is exploding the most right now, like Sarasota, Florida, for example, we can see home values now are down 0.9% year over year. If we look in Charlotte County, we can see home values have dropped 3.1% year over year. In Volusia County, it's basically flat. It has no appreciation in the last year. Home prices exactly the same as they were a year ago. In Lee County, Florida, we have 0.8% decreases. Now I understand, guys, that these are not massive drops in home prices, but you have to understand that this is all happening at a time when the economy is so-called booming right now, you know? And Florida is still like the place to be, and we're starting to see these home prices come down in this environment. Imagine what a big recession will do to these numbers. That's what I keep thinking about. I remember last time I was over here, this house was for sale, and now it looks like probably somebody bought it. Looks like somebody's gutting the place. Let's see how much it sold for. So this house did in fact sell back in August of 2023, but it took 6 months to sell this house, and it took a 15% reduction off the original list price to get it sold, from about $3.3 million down to $2.8 million. That's a $500,000 decrease, about 15%, guys. The new owner's property tax bill is also going to shoot up from about $6,900 a year to around 60 grand a year. Have fun with that. Even when we look at on a statewide level, for example, we can see that home prices in general have come down a little bit, okay? At its peak, home prices in Florida were at $388,000 median price according to SunStats, and that was back in June of 2022. And fast forward to today, of November of 2023, it's at $385,000. So not a huge decline, like I said, but nonetheless, it has come down. And this is why I keep telling people, you have to watch your individual markets, guys. Like, if you're looking at buying a place in Miami right now, these numbers are completely different than if you're looking at buying something over in Sarasota or Punta Gorda or Bradenton, Florida. Like, these dynamics are flipped upside down over there. And if you don't know that, as a home buyer, or even somebody looking to rent, you can easily get ripped off and overpay for something, which is exactly what I don't want to happen to my viewers. And you know something interesting, even in areas where inventory is not exploding, we're still seeing significant declines in home prices. The most notable one that I saw here on Reventure app, Sumter County, Florida, okay? Sumter County is where the villages are located and arguably one of the most popular places people are moving to right now, yet home prices are down 3.8% year over year there. In places like where I'm interested in Florida, like Flagler County, we have home prices down 4.3% year over year. And yes, the inventory is rising in these areas, but it hasn't exploded like Southwest Florida, but it's still enough to bring the prices down. And you know, Florida, since we're just kind of like leading the way in terms of everything, we led the way in home prices shooting through the roof during the pandemic, and now we're starting to lead the way in one of the biggest real estate bubbles ever starting to burst. I think this is a very good indicator of what you need to look out for in your market throughout the rest of the country, guys. If you start seeing inventory in your area up 15, 20, 30% year over year, that is a huge warning sign that you are gonna see price declines, okay? It's basically a guarantee at that point. And just by looking at this data from Florida, we can see that that is true. And really, to just put another nail in the coffin for Florida's market in general is this. The unemployment rate in Florida is starting to tick up, okay? Check this out. Check out what this says here. In November of 2023, Florida's unemployment rate increases to 2.9%. Now, it's still near historically low levels, but in October it was 2.8%, and that represents about 324,000 people out of work. And the first half of this year, unemployment was at 2.6% throughout the state of Florida and has been rising ever since July of 2023. But here is the real kicker, guys. The state's record low unemployment level was at 2.4% during the housing boom of 2006. Wow, wow, wow. This situation we're in right now is literally 2008 all over again, guys. Like, every single thing that we are seeing, all these indicators are happening almost the same exact way they did back then. The only real difference is we don't have the huge subprime mortgage crisis like we had back then and the wave of foreclosures, but that could still be coming. We could be seeing a wave of foreclosures due to unemployment, essentially. Here we have a house for sale for $5.2 million, but wait, if you think that's expensive, they used to ask $6.7 million back in February when they originally listed this house, and have cut the price a ton of times since then, took it off the market, put it back on the market. Now they're down to $5.2 million. That is a 22% decrease in price and a $1.5 million discount, and they still can't sell it, guys. I think it's safe to say that the market euphoria is officially over when we see listings like this. And to top it all off, they have a property tax bill of about $50,000 a year. So yeah, no big deal, just losing money left and right here. So guys, honestly, it's not really rocket science to figure out where things are going to go in your market over the next couple of years, you know? People always ask me these things in the comments. People send me emails asking, what do I think is going to happen here? What do I think is going to happen over there? And obviously I can't be an expert everywhere, and I don't claim to be. But what I encourage everybody to do is to just pay attention to everything I just talked about for yourself, you know? Look at where is unemployment going where you live. Look at what's happening with inventory. Look at are prices down or up year over year. Look at if rental prices are up or down year over year. Those four things alone are going to give you massive clues of where things are headed into next year. And you know, here's something else interesting. Even though this housing market is supposedly extremely robust still, that's what we keep hearing on the media, right? And they're saying that things are great with the real estate market and we're going to see things continue to go up. However, the numbers just came in for the November home sales for brand new houses, guys. And guess what? The amount of new home sales plummeted 12.2% in just 1 month, guys. That is a huge drop from 1 month to the next. The sales for these brand new houses just remain a little bit above where they were a year ago. But to have that sharp of a drop off is pretty crazy, especially since that drop off coincided with a time when interest rates went down. You would think that new home sales would explode through the roof, considering they already have some pretty great incentives for home buyers, and then you have mortgage rates coming down. Why would the new home sales go down, right? Economists were predicting that the seasonally adjusted number for these new home sales would be around 680,000, came in at 590,000, guys. So almost 100,000 less homes sold than they were anticipating. So everybody is surprised by this, to say the least. They're saying, well, this might change, you know, the data might get revised in the future, or they're saying that this might just be a shift in buyers' mentality. Maybe buyers now are expecting mortgage rates to continue coming down, and a lot of people are going to wait on the sideline for that to happen. You know, they saw, you know, these rates drop pretty fast within the last couple of months. You know, 2 months ago, you're looking at an 8% mortgage rate, and now you can get one in the 6.5% range if you have excellent credit. So it's really funny to see all these dynamics that drove the housing market insane, going nowhere but up for like 3 years straight there, into almost a complete opposite frenzy, where even mortgage rates plummeting like this in just like the last month and a half, 2 months, is not enough to get people excited and get out there and buy, guys. Even Realtor.com is predicting that next year in 2024, we're going to see home prices come down on a nationwide scale because of this shift in buyers' mentality. Maybe people are finally waking up to the fact of how fast things can change and how fast they have been changing with real estate over the past few years, and maybe they shouldn't make any hasty decisions. They're saying another possible explanation of what might have happened is, instead of buyers buying brand new homes, maybe they bought previously owned and existing homes instead, because existing home sales in that same month went up 1.8%. But I don't think so, guys, because literally when you see the sales drop 12.2% in 1 month, and then it went up only 1.8% for existing home sales, yeah, maybe some of those people bought an existing home, but the vast majority of them probably just dropped out of the market for now. One thing that will be interesting for sure is to see if these lower interest rates are going to entice people back into the market come springtime, right? Because that's right around the corner, and there's a good chance that maybe mortgage rates could be even lower in the spring than they are right now at the end of 2023, but so far it hasn't been enough to pull people back in. Is it seasonal? Is it just because the holidays are here? Maybe, because every single year we see home sales slow down around this time. But none of this changes the fact that houses are just too expensive, guys. In fact, Fitch Ratings, the ratings agency, they just came out and said that homes are overvalued by at least 10%, throughout most of the country, guys. And I think that is a gross underestimate, if you ask me. At least these big companies are finally coming out and saying that these home prices are just too expensive for what the value of the property should be compared to how much people make. But it seems like for a while it's just been people like me and other people on YouTube talking about this, and now you're starting to see big reputable companies come out and starting to say the same thing. But even though Fitch says that home prices are 10% overvalued, they're predicting that home prices are going to continue to actually rise into 2024 and to 2025, guys. Even Realtor.com is saying that they think home prices are going to go down in 2024. So it's hard to say, because you wouldn't think that an agency like Realtor.com would be predicting home prices to drop, considering their business relies on home prices and sales, you know, and home prices continuing to go up is not a good sign for realtors making sales into 2024. According to Fitch, they think that in 2024, we might see home prices go up by 3%, and in 2025, it'll go up anywhere between another 2 to 4%, guys. I don't see that being possible. I mean, anything is possible, but just with the situation that we're in right now with, when it comes to how much homes cost compared to someone's income, it's not keeping up, guys. All the big data firms are coming out and admitting this, even Adam Data, like we talked about the other day, you know, that people are spending record high amounts and record high percentages of their monthly income on their mortgage payments, and that just cannot keep going, right? We just cannot keep raising the price, and people don't make extra money to continue paying those higher prices. But according to Fitch, they think that 88% of the nation's housing market is overvalued, guys, and obviously it is, right? They say that more than half of the metros are overvalued by 10% or more. But like I said at the beginning of this video, the main things you got to pay attention to are what's happening with inventory in your market, what's happening with prices, what's happening with rental prices and inventory, what's happening with unemployment, guys. Just from those things, you're going to be able to tell so much about what's happening in your market right now, where things are likely to go in the future. Because I see predictions here, like in this story, where they're saying like, oh, you know, even though mortgage rates are coming down, we don't see that there's going to be an uptick in inventory into 2024, even if these mortgage rates keep falling. Well, why not? Because that's what all the experts were predicting, and now all of a sudden they're changing their mind. Now, I do agree that mortgage rates are not going to be enough to make everybody list their houses for sale, right? Because not everybody is driven by that. You know, like here in Florida, for example, you could argue that a lot of these people that are listing their homes for sale are driven by the extremely high costs of maintaining a home here now. Now, there's no way to know. I wish they had surveys about this when it comes to, you know, every time somebody lists their house for sale. I wish like the National Association of Realtors or whoever would just track this data and ask people a simple question, give them a simple multiple choice survey of why are you listing your house for sale? Are you moving because you can't afford it? Are you moving because the area has gotten too expensive? Are you moving for a job transfer? Are you moving because of a marriage, a death, a birth, whatever? Let us know. That'd be interesting data to have. And if we did have that data, it would basically give us a better idea of why people are moving, rather than just looking at interest rates and saying, oh, it's because interest rates are coming down and that's why people are listing their homes for sale, because that might not be the driver of things, you know? But I think just like they say we have all this pent-up buyer demand, we have just as much pent-up seller demand, people wishing they could sell, but they can't afford the house they live in now because the rates and prices are too high, and once the rates hit whatever threshold that might be, maybe it's 5%, maybe it's under 5%, I don't know what that threshold is, we might start seeing a lot of sellers come back to the market. There's no way to know for sure, guys, but one thing is for sure is the data doesn't lie. So you need to track all this stuff for yourself. How do you think I was able to make this video and figure out that the Florida housing bubble is starting to burst? Because I'm tracking this data, because I live here and I'm recognizing the trend before it becomes mainstream, right? If we keep seeing things go like this for the state of Florida, and especially the southwestern part of the state, those metros, you know, by the middle of next year, that's when you're going to see the news talk about it. The Florida housing market is in free fall. But you heard it from Michael all the way back in winter of 2023. You know what I'm saying? So you can really get ahead of the curve by just watching this stuff for yourself. So if you guys enjoyed this video, make sure you subscribe subscribe to the channel. Merry Christmas out there to everybody who's watching. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.